Welcome to Heart of Economy. Today we bring you a very different story. While the whole world is watching Nvidia's upcoming earnings, something remarkable has been unfolding quietly in China. A company often called China's Nvidia has nearly doubled in value over just the past 3 weeks, and it looks ready to explode even higher. But what does this mean? Is this simply a stock market hype? Or are we witnessing a deeper shift in global technology and finance? Let's break it all down, step by step. First, let's answer the obvious question. Who exactly is China's Nvidia? The truth is, it's not always a single name. Multiple semiconductor companies in China have been rising in recent years, but one firm in particular has surged to record highs, earning the title of China's Nvidia. Behind this rally lies a clear driver: policy support. China's government has made technological self-sufficiency, especially in semiconductors, a national priority. And as stricter U.S. export restrictions become, the stronger the backing from Beijing grows. In other words, this is not just about market demand, it's also about geopolitical willpower. And here's my take. When a company in China rockets to the top like this, it's more than just a commercial story, it's also a strategic signal. So how did this company manage to double its value in just 3 weeks? There are 3 main reasons. First, US export controls on Nvidia and other American GPU makers are forcing Chinese buyers to turn inward. Demand is being redirected into the domestic market. Second, the scale of AI investment in China is enormous. From hyperscale cloud projects and industrial automation, smart city programs, and state-backed data centers, all of it requires advanced chips. If this company can provide those accelerators and full systems, its growth potential is virtually unlimited. Third, market psychology. Once a stock starts rising, momentum builds, short positions get squeezed, and new investors jump in. This cycle feeds on itself, and that's exactly what happened here. But let's be clear, a stock can double quickly, but the real question is whether this company can build an ecosystem like Nvidia did. That's the true test. What makes this story even more important is the ongoing US-China tech rivalry. Washington is blocking the export of Nvidia's most advanced GPUs to China. What China gets are downgraded, restricted versions. That creates a vacuum, and local companies are rushing to fill it. This is creating what I would call a dual market. On one side, the US and its allies dominate the high-performance GPU market. On the other, China is building a parallel ecosystem backed by state support and designed to meet domestic demand. My interpretation is simple. The rise of China's Nvidia is not just about stock price momentum. It's about the formation of a new technological pole in the global semiconductor landscape. Some might see this rally as a bubble, but here is the reality. AI demand in China is not just about consumer apps, it's about infrastructure. Government cloud projects, industrial automation, surveillance, and national AI platforms. All of these rely on massive data centers. And data centers need accelerators. Yes, there are bottlenecks, power supply, cooling systems, and supply chain issues. But if this company can deliver not just chips, but full cabinet-level solutions, racks, networking, integrating systems, it can sustain margins and prove that demand is not only strong but also durable. Here's my view. Hype comes and goes, but infrastructure investment lasts. And China is clearly determined to accelerate those investments. Now comes the critical question. Can China's Nvidia really rival Nvidia? We have to be precise here. Nvidia is not just selling chips. Its real power lies in the software ecosystem it has built over decades, CUDA, developer tools, and tight integration across industries. That's a massive moat. China's emerging champion, on the other hand, plays in a different league. Its strength lies in state support, regulatory alignment, and captive domestic demand. That makes it less of a direct rival and more of a parallel player. So my view is this: it's not a zero-sum battle. Nvidia will continue to dominate globally, while China's Nvidia may dominate at home, and together, they shape a more multipolar semiconductor world. Finally, what does this mean for investors? First, Nvidia remains the global bellwether of AI. Its earnings will continue to set the tone for US markets. Second, China's Nvidia doesn't directly break Nvidia's global dominance, but it does reduce reliance on US chips inside China. Third, the real test for this Chinese company will come in the next 1 to 2 years, securing big customer contracts, proving long-term visibility, and keeping margins predictable. In short, we now have two different markets, two different champions, but one shared team: the unstoppable flow of capital into AI infrastructure. Today, we explored the rise of China's Nvidia, a stock that quietly doubled in 3 weeks, and what it really means for the global tech race. If you found this deep dive helpful, make sure to subscribe to Heart of Economy, hit the like button, and leave your thoughts in the comments, because in our upcoming videos, we'll also break down Nvidia's earnings and what they mean for the broader market. See you in the next episode.